All right, welcome back into Market Day Report. This is the last time we're going to get together for the year. How about that, right? And what a year it's been. Why don't we take a look and see what we've got going on in these markets, and that'll be a great way to kind of end things up. But it's been a good day for corn and beans. We'll start with corn. Look at this. It's the highest it's been since I've been sitting out here today. We got a 6 1/4 cent better board in the March contract. 458.5 is last. It's just, well, now 458 1/4. We're a half cent off the high of the day. And we've got about a 6 3/4 cent range. How about that? For 5 3/4 cents better in the May, 465 3/4 is last there. And again, that's just a half cent off the high. And we've had a decent range of 7 cents. So that's corn anywhere between, say, 4 to 6 cents better across the board. And when we talk about that market, let's move on to the soybeans. What do we got going on here? All right, here we go. Solid double-digit gains. 15.5 cents better in Jan, 997.5 last, and we're right on the high of the day. That's a 17.5 cent range too, folks. So we're right on the high of a 17.5 cent range. That kind of paints a picture for you, doesn't it? Right? 17 cents better to 10.08 3/4 in the March contract, and the May 17 1/4 cents better there to 10.20 1/4. And this is the half cent off the high there in May. So got a lot of 10 handles. We're making way for the Jan to give us one of those. We'll see. But again, we're looking at a decent board of 14 3/4 cents better to 17 cents better across the board in soybeans. All right, here we go. Let's go to the Chicago wheat market, though. Struggling to move anywhere higher. We're a penny better in March to 549 1/4. We're a penny better in May to 560 even. And that's 2 cents off the lows, 3.5 cents off the highs. I'm going to call that in the middle of the range. And as you go out the deferreds, we're just about a half cent better out there. That's SEP and Ds. All right, so wheat in Chicago, let's go steady a little bit better. All right, that's what that's doing for us. Hard red in Kansas City, steady, maybe a little bit better than a little bit better. How about that? March is up 2 1/4 cents to 558. We've got a May board up 2 cents to 566.5, and 1 3/4 cents better in July to 574 3/4. Spring wheat, let's do a little bit of a drive-by there. 1 1/4 cents better in March. 595 even is last, 2 3/4 cents off the high of the day there. But if you go out the deferreds, we still are negative. We're down a penny and a quarter in the SEP to 617 3/4. We'll check in on cotton. We'll get to our guest analyst. 8 points lower in the March cotton, 68.40s last. 9 points lower in the May cotton, 69.50s last there. All right, let's bring him in. Ted Seifried, Zaner Ag Head. She's coming to us from Chicago. Ted, thanks for being on. Anything jump out at you there when we talk about these grain prices?
I mean, we got a lot of strength on the board, Scott. It's interesting because yesterday we started off with a lot of strength and then we gave a lot of it back. In the case of corn, we ended up closing down. We had a near outside reversal down day. It did not look good on the charts, but then here today, the strength is sticking around as we're heading into the close. And, there's continued concerns about the Argentinian forecast. For my money, Scott, this feels a lot like how we felt about Brazil at the beginning of their growing season. If you look at Argentina, they're a little over 80% planted in corn and beans. So, it's in the ground, so it's a little bit further along, but it's still very early in the Argentinian season. I wonder if this is going to be a temporary thing that just comes at a time of year where we have fairly thin volume, a lack of farmer selling until after the first of the year. And this is sort of the seasonal time frame where we can find strength. So all those things kind of coming together, giving us a little bit of short covering in soybeans and giving us some strength. I do wonder, though, when we get into the new year, how that next WASDE report treats the market. If we don't have a big cut or a bigger cut in corn and bean yields, and therefore bigger cuts in ending stocks, you wonder if this might just be a very short-lived rally. But at least for the moment, it does look rather strong, and this is a little bit of a breakout to the upside. This is the highest corn's traded since early June, and the soybeans are clearing the levels of resistance that they had since mid-November. So, again, a lot of strength on the board. Looks pretty good, fueled by Argentina. I'd say that's the spark. But then, kind of a lot of things coming together, especially, just the timing of it.
It really just feels like to me, I know you're not asking, but I'll tell you what I feel. The sellers just aren't there. It's kind of easy to push the market around when that's the case. And I feel like anybody that wants to buy it today is going to be on a winner because it's hard to find a seller. And that's what's been happening. At least that's how it feels. But I would, real quick, 20 seconds. Are you telling your producers to reward this rally, though?
Yeah, I think so. When you look at corn, 55 cents off of the August lows, you have to reward that. I'm not saying that we couldn't go higher. Certainly if there's a problem with that second season corn crop, it could go higher. but I do think you need to be selling here at this point, and I always do. It usually, but I know this is more than 20 seconds. I really want guys to be more than 20% sold by the time we get into January,
Mm-hmm.
right? I mean, second highest peak of the year that we usually have is January 1st or January 3rd or whatever. I'd say at least 20% sold on new crop at this point.
All right. Okay, great stuff as usual. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Mr. Ted Seifried, Zaner MarketCast in Chicago. We'll be right back. All right, welcome back. Let's talk about our four-legged friends just one more time going into the end of the day here today and the year. Live cattle, let's bring up that board. I did it while we were away on break, and what we've got going on is, well, we're a little bit better. $1.20 better in the Feb. 191.50 is last there. $1.30 better in the April to 194.32. We do see gains as you go out the deferreds, but not as much as you do in the Feb and April, but we'll take it. Anywhere between 45 cents better to $1.27 better across the board in live cattle. Feeders, they were tacking on some gains the last time we visited. They still have them here. Jan's up $1.37 to $2.63, even while March, that's up $1.65 to $2.62.70, and that's still about 42 cents off the high of the day. All right, moving out to the lean hogs. We've got to make some room for our guest analyst here. We've got more losses on top of yesterday's losses, but not as bad. Maybe the velocity of the down move has started to slow. We're down 45 cents in Feb to 81.20. These are Feb lean hogs. April lean hogs down 25 cents in a quiet trade to 86.80. Let's bring him back in for one last time. He's the last guest of the year for Market Day Report. Ted Seifried, Zaner MarketCast, coming to us from Chicago before he takes his time off on his long-awaited cruise. Anything? You got 90 seconds. What jumps out of you?
Yeah, I like being that. I didn't think about that. That's awesome. You know what? We got strength in the cattle complex after being a little bit weak yesterday, but hey, we had gotten overbought, so this is all right. Look, it just seems like domestic demand isn't going anywhere. At least that's the way the market feels right now. I don't know if I feel that way. I'm a little worried that once we get into the new administration, that maybe things aren't as great for a little while. I mean, transitions can be difficult. Improvement can be hard. I mean, think about it. If you want to lose some weight, you want to lose, 20 pounds or so, the road there is an uncomfortable road. Yes, when you get to the end of that road, everything is all well and good. And I honestly think that's where we'll be in like 4 years from now, from an economic standpoint. But it might not be great. I think there's going to be inflation fighting. I think, tariffs, things like that. I do wonder if the reality is that, things might look different when we get into February, March, April. So I do think producers should be looking at hedging downside. But, you look at feeder cattle, you look at that chart, it's really hard to step in front of it. That thing's been a freight train. And again, new highs here today. So everything looks good technically. I think fundamentally I get worried, when I look a few weeks out. And I think taking advantage of the strength that we're seeing in the thin market trade, I think is a good idea.
Well, that's what you're supposed to do. You're a broker. You have to look out for your customers, and I think that's exactly right. I mean, you have to make sure that they're, you're risk averse. And I agree with you. It seems like everything's all well and good, but it's just not going to be that easy because nothing ever is, period. That's all I'll say. I agree with you. All right, Ted, thanks for coming on. Have a great trip, have a cruise. Thanks for being on the show. All your content is greatly appreciated. He's in Chicago with Zaner MarketCast. We're here with RFD-TV and Music Row.